many thanks indeed for joining us this morning. How would you assess this year internet stocks, particularly for the Chinese companies?
The Chinese companies is covered more by our colleague Ming Xiao, who covers the Chinese internet. I'm more focused on the U.S. internet. But the U.S. internet stocks, I would say that this year is a year where, it's been a mixed bag in online retail. eBay, from a stock standpoint, outperformed Amazon. I think Amazon has been a little bit more mixed, but I think the opportunity for Amazon is still very bright in 2012, but there's been a lot of concerns on margins, and some of the newcomers like the Zyngas, the Groupons, and the LinkedIns of the world have held up pretty well for the most part since their IPO.
You mentioned Groupon, Herman. How much uncertainty surrounds Groupon? Because, of course, the businesses they, if you like, give coupons to, some of them are having serious troubles, aren't they?
I think a lot of times the merchants are the reality of the Groupon business model is that the local commerce is still a very big opportunity, and there's still a lot of merchants that are, they want demand into the marketplace. And Groupon is one of those enablers, along with Living Social, which has an investment by Amazon. The daily deal segment has been a real driver for the local commerce. You do hear stories from time to time where merchants are upset because they probably have too much demand that they brought in. But I think some of the new initiatives that some of these companies are working on are basically helping address some of those issues out there.
When you discuss Groupon or eBay or Amazon, etc., Zynga, do you think the valuations are a little bit too high right now, and therefore that's a concern for the markets?
For some companies, I think you have to really look at the long-term approach of the company. For many times, one of the things that I would often advise investors is you have to almost put your venture capital hat on. You have to have more of a 3 to 5 year horizon when investing in these companies. A company even like a Groupon or a LinkedIn, we have never seen companies grow so fast in the internet industry since the portal days. And I think the difference between a lot of the companies from the first bubble compared to right now is that a lot of these companies now have a lot more sustainable profitability and a longer track record. With the exception of Groupon, Groupon is much more new, and they've grown significantly, much faster than anybody has ever imagined. And I think they're on track to hit profitability very soon. But the question is this model sustainable in the long term, given the amount of competition that's out there, and and their aggressive growth trajectories, not only in the U.S. but internationally as well.
Thanks for Herman Leung. Have a good festive period, and thanks for joining us.